What's up, people? Welcome back to Next Round Ready. I'm your host, Chris. We have special guest Liz Myslik from Loft Growth Partners here from the CPG, the consumer area. I've been trying to get a consumer investor on the show. Liz, welcome, welcome, welcome.
Thank you, Chris. Pleasure to be here.
Now, before the show, you did say you have done 20 plus years of angel investing. And I think when you do something for 2 decades, from my perspective, it automatically puts you in like a top tier expert category. Do you feel like an expert on angel investing?
I don't. And I think that's a good thing because I'm continuing to learn every single day. And especially in consumer, although I think this is true in many different industries, what it takes to be successful and build a great brand just continues to evolve. But actually, that's what makes it exciting and fun too, because I'm always learning. And there's always new ways, and no two businesses are alike. So I feel like I learn as much as I share as an investor and on the experience that I have of building brands. So I sort of wound down my angel investing when I started the fund with my partners. So now we are fund investors. So we bring together resources from our own balance sheets as well as many other wonderful people who have joined us, and now we invest on behalf of that group of people in the next great brands of the future.
That's interesting. What was the transition like from angel investors to starting the fund? I'm seeing a lot of it kind of like the opposite way, where I see some people that are in the funding area in venture capital becoming angel investors.
Well, for me, it was a journey. Really, my primary focus for couple of decades has been on operating businesses. So running the kinds of companies that I invest in. And so angel investing was my side hustle because it was something that I just loved connecting with entrepreneurs. That makes my heart full, and my cup full is to connect with amazing people who are creating new products, new services to make people's lives better. And so I spent my nights and weekends doing angel investing and connecting, serving on boards, things like that. I decided I really wanted to make that a full-time thing. As much as I love operating and running businesses, I can only run one business at a time. Whereas as an investor, I can support many businesses at a time and talk to many different founders and leaders and different problems they're facing and help them. So that for me was the transition of just really focusing on it being something I did on the side with my own money to now really focusing full-time 100% with the resources of many to make great investments and help great brands grow.
I like that perspective because you kind of want to spread that knowledge, expertise, experience, and be more helpful to more companies. It kind of takes the focus off of you and what you selfishly want to do, and then you can pour into more people.
Absolutely. Yes. I mean, I've learned, I've had a lot of success. I've also made a lot of mistakes along the way. So my hope is to share what I've learned with others. And as I said, it's a mutual process because I learned so much from our founders too. So it's a very enriching relationship and experience to support others and help them grow, and very humbling.
That's interesting. So with you having the fund now, what's like the criteria for the founders that you're looking for? Because I know every fund is just vastly different.
Yes. So we are what we call a growth stage fund. We're typically investing around Series A. So we're focused on, our check size is generally between $3 to $5 million, and we always expect to have follow-on investment up to about $10 million per company. We are intentionally a highly concentrated fund, meaning at any one time, we're not investing in more than 5 to 8 companies per fund. And that is because we want to align a couple reasons. One is we want to align our interests with our companies. When a fund has 20, 30 or more companies they're investing in, it's impossible for them to really devote meaningful time or resources to any one company. Yeah. And it's a little bit of the portfolio effect, right? If I have 20 or 25 and one of them doesn't make it, well, I can make it up in the others. For us, failure is not an option. We're really focused on ensuring that every single company is successful because our success depends on their success. So that really aligns our interests, which I think really creates a beneficial relationship. The other reason is that we want to be able to have the bandwidth to help each business. We are all former operators ourselves, so everyone on our team has run businesses or been involved in operating companies. And so that allows us to bring an unfair advantage to those companies that we support and invest in by bringing our networks, our experience, our expertise to help them grow. And for that reason, we only invest in companies that we ourselves understand and have run or have had involvement in before. So that means we're very, very narrowly focused from an industry and a category perspective. So we focus on fast-moving consumer goods categories across food, beverage, personal care, home, and pet. So these are products that have very similar distribution channels, go-to-market strategies, economic platforms. So that allows us to be very focused and, again, provide a lot of expertise to help the brands grow. In terms of geographic focus, we're US-based, so we are not investing in companies that are based outside the US, but it can be in any state of the country. What else can I tell you? Generally, the size of the businesses we're investing in, I mentioned Series A. There's a loose, affiliation with revenue, but we're generally looking at businesses that have some, demonstration of product market fit and track record with retailers and consumers. So we want to know, we may fall in love with a product that's a pre-revenue or early stage, but we've got to have conviction that consumers love the product and are continuing to buy it again and again and again. So again, there's a broad range of what that means from a revenue perspective. It can be anywhere from 5 million to 25 million in terms of TTM revenue or trailing 12-month revenue.
Okay, that's a solid breakdown. I like the specificity of the fund because I talked to some investors and it seems like they just want to throw money wherever they can or wherever they're excited to. And I don't think that's bad, but then when I talk to founders, so many founders want somebody who is not just giving them money, but who can support them in other ways outside of the financials. So with you and your team, what's one of those key elements that you can bring to that founder that you've invested in?
Yeah, I mean, that's so well said, Chris. I joke that, everybody's money is the same color. It's the ultimate commodity. There's no differentiation. My money isn't any better or worse than somebody else's. So what it really comes down to, what differentiates one investor from another is, how they show up for their partner companies. We call them partner companies, not portfolio companies, because we really endeavor to be great partners. And it's really, what we intend to do is really in our name. Loft is about elevating the people behind the companies. So we believe if we invest in great people, they will have great outcomes, because no one business grows, up and to the right in a straight line. There's always lots of twists and turns along the way. So specifically how we help them, it can be many different ways, but just based on what we've done and how we've experienced these businesses in the past, it could be something like making a connection. We have, if a company wants to get into Target and have distribution in Target, we have relationships there. If it's, hey, I have a supply chain problem, I don't know how to reduce my unit economics or my unit cost and improve my gross margin. Well, I ran a manufacturing company for 10 years, so I can help with that. So if it's, hey, I really want to hire my next great CMO, we have a vast network of talent that we've worked with over the years that we can help connect those dots. So there's lots of different small ways and big ways that we help and support our partners every single day.
That's so important in the consumer space specifically, because software is challenging, but I've learned that consumer is a different type of heart that most people don't know about. Like when it comes to the headache of getting in a grocery store or getting into a Target, and not only getting in there, but keeping your product on the shelves, it is extremely challenging. And I just don't think it's talked about enough how challenging consumer is in that way.
It's so true, Chris. You hit the nail on the head. I actually started my career in tech, and so I got to see and experience what it takes to be successful there. And it takes a lot. Don't get me wrong. It's incredibly hard. But it's about really the IP, the technology that you're building, and that can be something that's, you create it, it's really valuable, it has an audience, it has a market, you can sell it. Whereas in consumer, it's about the value that's created is through the brand that you're building, and a brand is built over time. A brand is, the best definition of brand that I've heard is, it's a piece of real estate that you hold in someone's mind. So it's built through a series of interactions that a consumer has with you over time. So it's not a quick hit. It's not a quick buck. It's not a quick way to make money. You don't do this for that. You do this because you really want to make a difference in people's lives and build something that endures. And so that takes time. That takes years. There's very few, in fact, I don't know of any overnight successes in the brand space.
Right?
They
None.
You may have just heard of them a year ago, but they've probably been at it for 10 plus years.
And I see like Sahil Boom is like releasing his men's skincare line right now, and it's going viral everywhere. But it's like that is can be successful because he already has success in so many other areas. So I wouldn't even count that as an overnight success in a consumer space. I think it's very, very challenging, which is why the founders I speak to, I try to help them connect with investors who really understand the consumer space, because like the logistics, oh my goodness, like with the tariffs and like with COVID, it's so many variables to get product from this place to that place.
Yeah.
One wrong move and your entire business is up in flames. It's honestly, it's terrifying.
But it's also really rewarding when it's done, and when you have the opportunity to really have someone touch and feel your product, experience it, fall in love with it, and stick with it. I mean, there's no greater pride that can come for someone than doing that. So it is really hard, but there's a huge payoff for doing it, which is, to again, like create something that can have a real impact on people, whether it's skincare that makes you, feel better about how you look, or really help your skin feel or look great, or it could be, about a great nutrition bar that helps someone to ensure that they're meeting their nutrient goals for the day. I mean, there's just so many different ways that you can touch people.
Yeah, I agree. And then I wouldn't have my favorite food on the shelf at the grocery store. So
that's right.
I'm here to support.
Well, what's really exciting, Chris, is that, thanks to the hard work of so many amazing entrepreneurs, if you look at the products that we're buying today in the grocery shelves, almost half of them didn't exist 20 years ago. I mean, think about that for a second. The brands themselves, almost half of them didn't exist. So that's because of innovation and the work of tremendously talented and creative people that are out there building brands that we as consumers all love and buy. So it's amazing. Innovation has a place, and everyone has the opportunity to create something and have it be successful. So I couldn't be more supportive of the entrepreneurial community and people getting out there and trying and put themselves out there and see what happens.
And so that leads me to a question about the founders that you want to work with. What are some of like the key traits and elements you're looking for in a founder that gets you excited to invest in them?
It's a great question, Chris. I want to invest in people, first of all, that have a vision and a passion for what they're doing. And that's infectious. That's obvious right away. You can feel that. We all know what that feels like when somebody's got that charisma and like, this is the person I believe in, I want to follow. That's just that unspoken thing that you can just sense when you're with someone. I also want someone that's resilient. And to me, that is defined by they've gone through hardship, either personally or professionally. They've gone through stuff and they've powered through, and they've come out the other side stronger, wiser. So I want to know what your failures have been. And if you tell me that you haven't had any, I'd probably be more concerned about investing in you, because everyone has them at some point. So, that's important, is just the resilience of having gone through something. And even the brands that we invest in, I want to know that there have been some hiccups along the way, because you got to have it be battle tested, right? This is, as we said, a long journey, and you're going to face lots of obstacles on the way. Another thing is just a self-awareness. No one can build a business on their own backs. It takes a village. It takes a team. It takes a community. And so I love investing in founders that have an awareness of what their strengths are and where they don't have strengths, what their weaknesses are, the areas that they just really don't want to focus on. And I want to see that they've surrounded themselves with people who have complementary strengths, who, if they have a weakness, somebody else. If they're an introvert, that they've got somebody by their side that can be kind of that spokesperson for the brand. Or if they don't like finance or don't want to deal with financial statements, they've got somebody who can really do that for them on their team, so that they really understand, again, what they're dealing with, and not afraid to bring others on who have different strengths or also willing to challenge them. And the last thing is a curiosity, because building a business is you're constantly having to reassess, reevaluate, and pivot. I mean, there's always times where you got to kind of look. And so just a curiosity, and that's a cousin to humility, because we know it takes, the entrepreneur archetype is definitely somebody who has the courage and the drive to bust through walls. But, you got to be curious too along the way, to sort of be aware of what can happen in the world and the market with your consumer that could impact your business. and just be willing and open to accepting that and adapting where needed.
That's a really good list of traits and attributes that a founder has to have. I think that the team aspect is one that I'm seeing be more controversial now. I was looking at some of the data from Carta, and it's a lot more solo founders now that are even raising capital. And so is that something that you guys do? Do you ever invest in solo founders, or is it like you have to have a really qualified team?
It's a great question, Chris. Generally at the size and stage that we invest in, we've never encountered a solo founder at that stage. To kind of reach that level of I would say provenness, it takes a team. But it's interesting that you say that, because I think it's indicative of a broader epidemic, if you want to call it that, around soloness and loneliness. I think people are less connected to one another than ever before. And I think businesses will only get stronger when they're done with others. And so sometimes it takes one person with a great idea to start something. But I encourage any founder to build a community, either directly or indirectly, to build their businesses, because it will be stronger.
I agree. I think AI kind of plays a factor in this, where you can use AI to make the visuals, to build the website, and like a bunch of little things. But I think those interpersonals, those soft skills that you mentioned, are just so vital to a company raising capital, really scaling, that it's hard to get to that $3, $5 million, $10 million range if you don't have several people that can kind of fill those gaps. AI just isn't there yet.
And I do want to say, there is definitely, there are a lot of founders that have, let's say, some degree of outsourcing in their business. So, for example, using brokers to help with sales, or using outsourced bookkeeping firms to help with their accounting. So there are definitely ways in which you can have less internal staff, which I think is really helpful and important for a founder early on, when you don't necessarily have the funds, or you haven't generated enough profitability yet to pay a bigger team, but you're still really working with others. It's just a matter of, it's the nature of how you're, let's say, paying them or engaging with them. They might not be full-time employees, but they're still part of your team.
Yeah, I agree with that. The kind of like outsourcing, hiring the agency model. That's how I've worked with some brands on like their startups and the different like media content and all the podcast stuff and things like that, which I think is good. You don't need to hire me full time to have some of the insight and skill. You don't really need to hire me full time for that. But if you recognize the importance of it, a 3-month or 6-month retainer is perfect, because then you can still get the benefits without making me a W-2 employee. Like, that's just way too much work, and it's not necessary.
Yeah, and it's just a more creative, I think, progressive way to work with people and build teams.
And so what's something that turns you away? I love asking investors this question, because I find that there's always one key thing that is like their pet peeve when they talk to founders.
That's a great question. Let's see, one thing that turns me away. I think something that turns me away is someone who doesn't maybe show any sense of curiosity or interest. There's, I've certainly, again, what makes founder a founder and an entrepreneur is just this drive and kind of force of nature, which it takes to kind of, build something from nothing. But
you got to be willing to sound crazy.
There's a fine line, or maybe not so fine, between that and just being, let's say, someone who doesn't engage with other people, or doesn't want to hear what others have to say, or want to hear questions and things like that. So I think still, again, being humble, being curious, being open, listening to others is really, really important. So if I sense that from someone, I'm probably going to be turned off.
That's good. That kind of similar to one that I've kind of heard about, like ego. If there's too much ego, because you want a founder to be confident and have self-belief. But a couple investors have mentioned like the ego thing, or if they're not coachable, kind of in that space, it just seems like they're difficult to deal with. Like I don't think anybody wants to deal with that.
Coachability is a good word. I think that's very true. Ultimately, again, the founder, any investor, if I invest in your business, it's still your business. So you know best. You're going to have a direction. Again, no two businesses are alike. You're going to be facing things that I could never know about, just because I'll never know your business the way you do. But are you open to receiving feedback or hearing perspectives that aren't your own? That's maybe a good definition of it. I love that word, though. We do use that word quite a bit in our team. coachability. And I think as a human being, we should all be thinking about that, being coachable.
Yes. And I try to tell myself I don't know everything about everything, so I know nothing. And it just
The
helps you
older I
learn.
get, the less I feel I know. So it's going in the opposite direction, maybe just because the world gets bigger.
Right? I agree. I agree. So, what's been an investment you've made so far in your career that you're like super proud of? One that you think about all the time, that you brag about nonstop?
I'm so proud of so many investments. I mean, I'll tell you, there's some that have been really successful, and there's some that haven't that I'm really proud that I invested in. So one, investment that is an active company in our portfolio right now that I'm just so inspired by every day is a company called Back to the Roots. And Back to the Roots, and I love to use this example because I think it is a very inspiring example for a lot of entrepreneurs around resilience and curiosity, some of the things we've been talking about. So it was founded by two friends who met in college and had a shared interest in organic farming and regenerative farming. And so they actually started the business, Back to the Roots, as mushroom farmers. So they thought they wanted to create mushrooms out of reused coffee grounds to
Like
try to
only
create a
mushrooms?
sustainable model for farming. And they had an urban farm in Oakland, California, where they grew these mushrooms in a literally like a warehouse. And that's where they started, right? Along the way, they added things like grow kits where, you could kind of grow your own mushrooms at home, to cereal, and ultimately landed in organic gardening products. Think soils and plant food and seeds and all kinds of seed starters, all kinds of things that enable you to grow your own garden. And that is where they really found their magic. And that's where the business really started to hit that J curve and take off. But the point of it is that they tried a lot of things along the way that didn't work. And they didn't give up. They were curious, they adapted, they kept trying different things, and they listened. And they were obsessed with their consumers. They were obsessed with creating a great experience for people. And their core mission, which was to help people feel more connected to food and where it comes from, is the same today as a very successful and the leading organic gardening brand in the country, sold at Walmart and Target and Home Depot and Lowe's. The same mission now that it was when they grew their first mushrooms. So the mission stayed true, but how they manifested that mission changed over time. I think that's a great example and a very inspiring story around just, again, not giving up. If you have something you want to give to the world, the how might change, the why doesn't have to.
That's good on solving the problem and not
Yes,
being so focused on your solution you have made up in your head. Is
that's
that it
right.
might not be the successful company. You might have to pivot a little bit and make some tweaks along the way. And you can't be too married to that specific solution that you came up with first.
That's right. Well said.
Okay. So are there any things any companies, I love this question too. Are there any companies that you passed on that you're like, man, I wish I had invested?
Oh my goodness, so many. Of course. I mean, there's so many. Oh gosh, can I think of one? There is a company that I love that I use every single day called Purely Elizabeth. And this is a granola company and more. I mean, she has lots of different cereal options for people. Elizabeth Stein, she's so inspiring. And I met her many, many years ago when she was starting out. She actually moved her business from New York City to Boulder, Colorado, because she wanted to be closer to this incredible ecosystem we have in Colorado around natural foods. At the time that she was raising money, I had actually made an investment in a different granola company that no longer exists. So I really didn't want to have two competing brands that were literally competing head to head. And so I had to pass. But I have watched her every day since and, connected with her, and she's doing phenomenal things and really making a difference. And her products are amazing. So if you haven't tried Purely Elizabeth granola, you got to do it.
Okay. Now, a last question before we go. I always ask investors, what's one piece of insight you have for founders who are raising capital?
Well, what I would say is maybe I'll say to founders, I would encourage you before you even think about raising capital, I would ask you why you are building your business and what it is that you want to achieve with it. And the reason I think that's important is that says everything about how you should grow. There are many, many different ways to grow and finance your company. And taking investment from equity investors like me leads to a very specific path, especially an institutional investor, a fund, an equity fund. That leads to a very specific outcome, which is to sell your company. And not everyone wants to sell their company. Not everyone wants to scale their company to 100 million plus. Some people are creating their products and their brands because they really love doing what they do and find that once, as you start to grow, what you do every day changes a lot.
Yeah.
You work on your business, not in your business. So, if you love making, I'll just use a granola example. If you love making granola and you want to, and that brings you joy every day and creating new flavors and selling it to people and being in front of consumers, that changes if you take on investor money and you have to grow and scale this business. You find yourself doing very, very different things. So I would really ask yourself your why of, that you're doing what you do, and then think about all the different options that are available to you. To me, Chris, the best option, the best source of financing is your own business. You will have total control and optionality if you are actually profitable. And yes, it is in a consumer business possible to be profitable out of the gate. It's all about thinking about your cost and your price. And, far too many people think I have to raise investor money to be able to grow a consumer business. You don't. And in fact, the most successful ones are profitable from the beginning. So I encourage your founders to think about that in the context of what they want to do. It takes so much effort, time, hard work to build a company. And so I want every entrepreneur and every founder to be able to control their destiny. And the best way to do that is to be profitable as early as you possibly can so that you can decide how you want to grow, when you want to grow, and with whom.
I love that breakdown. Liz, thank you so much for being here, being such an amazing guest.
Thank you, Chris. It's been such a pleasure.